How's it going, everybody? It is Dennis, and we're back, and the markets are down still year to date, negative 3.24%. As you can see on the screen, we're sitting at $567 at SPY, down $1.51 in total. We're down on the day. The market just keeps going up and down and up and down and under. I don't even know what's going on. Like, we went up, everybody was having a great time, and then now we're going back down again. So we don't know. We don't know where it's going to go. But besides that, as you can see in the title, even with the markets being down, I have increased my income by $400 a month. And how am I calculating this $400 a month? Well, that is because I've been earning that $400 a month previously using SPY, using poor man covered calls on SPY. And how did I get another $400 on top of that? Well, I added another contract on top of the contract I already had. As you can see right here, this is my original contract on SPY expiring in December 19th. I bought this for around, $8,800 right here. As you can see, $88 times that by 100. $8,800 is what I paid for this contract. I'm currently down $2,800, but that's okay. You know, it's all good and dandy. I believe S&P will go back up, so I'm not stressing. We all know S&P returns roughly every single year, annually around 9%, 9 to 10%. So I'm not stressing. I need the S&P to be around $628 to be break even at the end of the contract expiration. And S&P was previously around 610-ish. Let's go and take a look at the 3-month chart. S&P was around, this is not the S&P, this is my contract price. S&P was around the 612 mark. What was it at the peak? I think, yeah, 612 was its peak. So it was around the 612 mark at the peak. So I'm not too stressed. Even if we don't get to the $628 mark for the break-even price of the S&P, we could always just move it over to next year and pay a little bit for that move. And anyways, I'll still be profitable with that $400 a month. So this is the new contract I have purchased. I have purchased a contract expiring in March 20th. So this is once again a year away, or 52 weeks to be exact, 53 actually at the time of the purchase. And we paid $72 per share, or $7,200 of the contract. So it is cheaper than the previous one. Of course, I bought this previous one when the market was higher, and now I bought this one when the market is lower. They're both $540, except this one has more time to expiration, of course, compared to the other one. And this one is down negative $481, or negative 6.68%. And of course, this one is break even is lower as well at 612. So that is the peak of what the S&P was before the market started heading downward. And therefore, that I think, or I believe, is easily achievable once the market recovers, or if it recovers in this next year, or until March 20th, 2026. If we get to 612, my $7,200 are given back to me, or I transferred over to the next year, pay maybe a little bit of premium, or move up my contract upwards to another position, maybe make some money on the upside as well, and continue to trade my main money maker, which are my weekly contracts. So currently I have a weekly contract expiring on April 4th. That is, what is the value of it currently? $1.65. I'm up $197 on it, or 54.42%. You might be asking, how am I up $197 on it and have another $1.65 in value? That is because this position was technically in the money a little bit when the market was trending back upwards. The original contract for this was $573, we can see right here, or $574. It was supposed to expire this week, when the video is being uploaded on Friday, on the 28th. But the market was getting a little too close. The S&P was getting close. It was actually in the money for a little bit. And when the market dipped a little bit, I found an opportunity to move it over to the next week for $580, $4, and make myself $58. Was I too early on this move? Probably. The market dipped down more than I expected, and I could have definitely made more than $58 on this move. But since now we have another contract, $58 is not all that we're making for this week. On this video, on the time of this uploading of this video, I'll be doing another trade for my second contract now that I have on the S&P. The second contract is expiring, of course, the day of this video going up, the 3/28th, and it's currently up $141, or 97.24%. It made me $145, obviously, since it's 97% left, and there's 4 cents of value left, or $4 times 100. So there's $145 made on this contract, and I will be moving it to next week for maybe around $200 to $150 more of profit. Yes, you heard that right. $200 to $150 worth of profit. Meaning if I'm able to continue to get around $150 of profit, that $400 a month now goes up to $600 a month, assuming I could continuously get $150 every single week with the current volatility in the S&P. Now, you might be asking, how did I buy another contract in S&P? Just a week ago, you only had a purchasing power of around $4,000, and you bought a contract that's worth $7,200. Well, I sold a position that I've been holding for over 3-4 years, and that is DHS. I had a position in DHS. It was roughly $4,700. I was up on it probably like 20%, and it was paying me a measly $5, $7, $10 around there every single month. And honestly, it was not worth holding it for me anymore. This portfolio is supposed to be made to make high income, high return, and just be more on the risky side rather than the safer side. That is because, of course, I also have my Roth IRA and all of my safer holdings in other accounts. Meaning this account could be just used for high risk, high reward plays. Of course, with that move of selling DHS and purchasing a contract on SPY, it did lower my margin buffer. So before my margin buffer, before doing this trade and before selling DHS and purchasing the S&P 500 contract, my margin buffer was around 40%. Now my margin buffer is, I'm pretty sure, is at 27%. So it did drop my margin buffer, but it's okay. We're going to be making $400 a month roughly, additional to what we were making already, meaning that margin buffer is going to increase faster and faster and faster. Also, what that means is the next contract should be coming up way quicker than expected. I still have a buying power. Let's see what my buying power is. Can I see my buying power here? It's not showing me my buying power. Let's just go to S&P and it should pop up. We have a buying power currently of $2,510 or $18, right? That $2,518 will now be increasing by not only the income and the dividends and the options that we're getting before, but now we're getting an extra $400 a month on top of that. So the increase and the time I'm able to obtain more contracts will be sped up as well. So now, before I was assuming I'll get around maybe 3 contracts this year. I might even get 4 contracts this year, assuming I'm able to get some aggressive trades and make some aggressive profits, and therefore get more and more contracts. And the faster I get contracts, the more contracts I get, the faster I'm able to get the next and the next and the next contract. And of course, where are we standing currently with option trades for this year? Well, or for this month. Currently, the option trades for this month are lower than last month. Of course, that is because TNA gave us a low $500. Last month, TNA gave us $1,210. The reason for this lower trade is because, of course, TNA dropped in value tremendously. It's a 3 times leveraged ETF on the Russell 2000. Before, I was trading at 47, which is my break-even price on all my contracts, or on my poor man covered call contracts, as you guys may or may not know. On TNA, I'm trading the same strategy, poor man covered calls. And the break-even price for those contracts is $47. That's why I was okay with setting 10 contracts on 47, even with the higher risk that it was at the time. I know that if I sell it for 47, my lower contracts will be in profit, and therefore I am okay with selling out of the position and making myself $1,210 in the meantime. Now, since the TNA has dropped down to like I think $32, $33 per share, I dropped it down to $40, which is a risk, of course. From 47 to 40 is a great drop, and I made only $500. The reason for making $500 because it has around 85% chance of actually happening, or a 0.85 delta of occurring, and of course it paid me less since there's less risk. It paid me less, of $500. So that means I'm down negative almost $800 from what I could have been, or negative $700 from what I could have made. Assume I made $1,210 that I did last time. I'll be earning more this month than I earned last month. You add $1,237, you add another $700 on top of that, and that gives you roughly, what is that? That gives you $1,900. And plus the one more trade that I have left on S&P for this week, that would have boosted me up to over the $2,000 mark just from contracts. And that's not even having the S&P contract for a full month. The new S&P contract I've only had for 2 weeks, or this is going to be the second week of trading it. So therefore, as you can see, I opened it up on the 24th. So this is going to be my first time rolling this contract, meaning that for next month, if we're able to get another $1,000 trade on TNA, or even if we're able to get like a $700, $800 trade on TNA, there's a possibility that we'll be over to the $2,000 mark or even higher. So what does that mean for our overall portfolio? We might be getting close to getting to the $4,000 a month mark, assuming that dividends are able to keep up as well. Of course, with the market going down and the values of our ETFs from YMAX and Roundhill and all these funds are going down, so has the dividends that we've been receiving. But of course, we continue to reinvest the dividends or the margin from the dividends. So we continue to increase our positions, increase the amount of dividends we're able to get. And assuming that the market does recover sooner or later, hopefully before the summer hits, we will be able to grow our dividends faster and faster and faster and higher and higher and higher. Especially if we're able to buy lower and cheaper and then recover that value and recover those dividends that we're going to be receiving. It's going to be great to see those higher dividends coming in. That's assuming the market recovers or starts recovering after this month. But as we see right now, we continue to get hit by tariffs and tariffs and tariffs. And, you know, whatever your opinion is on that, that's your opinion to have. But it's not always great seeing tariff news and the market drops by like 3-4%. Well, not the market, but my portfolio drops by like 2-4%. And the market drops itself by like 1-2%. So it's not great to see that on like a daily, weekly basis. But what can you do? That's just what we have for now. Hopefully, you know, smooths out, calms down a little bit, and we have a better market to trade and consistent dividends to come in. But while we're here, might as well just continue to buy cheap, continue to trade. And that's what I did with this S&P contract. Like I said, instead of paying $8,800, we paid $7,200, and I got additional 3 months of trading opportunity on top of that, almost 4 months. So extra 4 months to trade compared to the one we had before. Of course, it's also been a little bit of a time since the last contract. And we paid roughly $1,600, $1,400 less than we did for the contract before. So yeah, and our break-even price is lower as well. So it's a win-win. We added $400 a month on top of that. So that is how the portfolio is looking so far. That's how we're able to add $400 a month on top of our portfolio. But while we're here, we might as well go over how much the YMAX and Roundhill dividends I received for this week. I didn't do a video on Wednesday because I just didn't see that it was worth to do. You know, the dividends I received weren't that, you know, crazy, weren't that exciting. I didn't have any of the crazy funds from this week's payments. I only had YMAX and Roundhill. But from YMAX, we received $82.41. The distribution was $13.15 per share. And we did add an additional $10 on top of that and have 626 shares of YMAX, which will continue to grow and grow and grow. And these are one of the funds that I am mentioning from the last speech I had. We continue to add YMAX shares. Hopefully YMAX does begin to recover when the market begins to recover. And of course, hopefully the distribution begins to recover and grow once the market begins to recover and grow. And this $13.15 turns into $20. And instead of it getting $82.41, we're getting $140 and plus dollars on those shares that we have. And also with QDTE as well, hopefully this is another one that's recovering, or will begin to recover. Tracks the QQQ. We're currently sitting at 242 shares. We got 2361. You know, we did get a low distribution of 1514 on the first week. Therefore, we are coming in at negative 6.03% lower than last month. But overall, we did pretty well this week or this month. $213.73. We got $57.19 for the last week. Lower by 13.82% from week 3, higher than week 2, but we did add a couple shares on top of that. And as you may or may not know, QDTE shares are way more expensive than YMAX shares. And we also didn't go over that for the YMAX side, but for YMAX, we are down negative 0.96% compared to last month. 386.25 for last month, 382.54 this month. We are adding more shares into YMAX than we are in QDTE, of course, because they are cheaper. We went from 568 at the start of or 599 at the end of February to 626 at the end of YMAX. And of course, we did receive lower distributions, but that increase in shares did help dramatically, as you can see, because we're at $382.54. So that is pretty much it for this week's video. Not really much to go over for this week. Nothing crazy in the news, nothing crazy in the account. Just like I said, and just like I mentioned, just increasing my income, my monthly income by roughly $400 a month to be safe. Could be even in the $500, even the $600 area, or maybe even $800, depending on the trades I take. If I'm able to get $200 every single week, $800. If I'm able to get 150 every single week, $600. And if I'm getting $100 a week, $400. But $400 is what I look for. 150 and 250 is nice. 200 is the cherry on top. If you get a $200 trade every single week, that's a cherry on top, especially with the market currently. But of course, the $200 trade will be riskier. So therefore, I stick around the 150 mark if I'm going like trying to make a little bit extra profit on top. And $100, of course, is just to be the safest you can. So I will continue to trade. I'll continue to earn income. I'll continue to grow my account. Of course, it's kind of hard to see your account growing when the market keeps going down. You know, you buy positions and you're like, yes, I bought cheaper. I bought more shares. Can't wait for my account to go back up and show that positive, and get more of those dividends and get more of those distributions and earn more income. But then you get hit by another market downturn and then your distributions go down. And it's like, what was the point of buying those shares? But what can you do? Nothing much you can do. Just sit, wait it out. Of course, we're only like a month or two into this. It's only been a month or two. We don't even know if this is a fake rally that we had from the bottom. It could be a fake rally. We might head more and more down. I think we've only experienced, how much downturn have we experienced in the past? I don't even know how much downturn we've. I think we've experienced. Well, year to date is negative 2.24, but that's from here. I think we're down. I can't even see. I wish I could show you guys. But I'm pretty sure we're down a decent amount for this year. And I think we're going to continue, or not for this year, but since the market started going down. So I think we're roughly down 5, 6, 7%, maybe even. So I know the QQQ reached almost 10% negative towards the bottom. So hopefully 10% is all we're getting for this year. Hopefully from there we could go up. If it does go down another 10%, it's going to suck. It's going to suck a lot. But there's nothing much you can do. Just continue to lower your average cost. Purchase into companies such as SPYI, JEPQ. Of course, it's not financial advice, but this is just what I'll be doing. Buying SPYI, buying JEPQ, buying more contracts while they're cheap, and just ride it out to the top, because we all know if there's a hard market bottom, 10-20% drop, usually the bounce up is dramatic and strong. So therefore, all your things you'll be averaging into, they'll jump back up pretty strong. So anyways, that's the video for this week. Like I said, not that crazy of a video. No dramatic new strategy or anything of that sort. No new stock or ETF to invest into. Just talking about my portfolio. Talking about how I increased my income by $400 a month. And that is pretty much it. I'll see you guys for next week on Wednesday. Yes, the Wednesday video will be coming out next week, because next week we have our AMD dividend distribution. And of course with the YMAX and QDTE and everything of that sorts. And of course we will also be going over our monthly income probably next week on Friday. Assuming I get all my numbers in by the end of this week and the start of next week. So anyways, see you guys next week for next week's video. Thank you so much for watching. Hopefully your guys' accounts are doing strong or handling themselves well with this market, unstable market. And hopefully those distributions are continuing to increase or staying stable, and you guys are earning good money. So anyways, see you guys next week for Wednesday's video. Bye.